Okay, so again, here we're learning chapter 14, which is going to be the last lecture chapter that we have for this entire book. So this entire class, we had a total of, 13 days? Because we still have 2 more. 13 days. And we able to look at all 14 chapters, okay? So this last chapter is very, very, very important, especially for accountants, okay? This is where we're going to finally wrap up our year-to-end processes or procedures, also known as adjustments, okay? This is where we finally are going to be wrapping up the accounting period, okay? Now, what is an accounting period? An accounting period is basically when you are completing an accounting cycle where you start out with journalizing and you start out with recording transactions, and then at the very end you complete your trial balances as well as any reports or any means to close out the accounting period. So when we close out the accounting period, basically that is where we measure a couple things, right? We measure profitability, we measure equity, which is the net worth, okay? And that's exactly what this chapter is going to talk about. So again, if you're going to be following along with me, we're going to be in adjustments 21, okay? Now again, there is a huge list of what you need to do when you guys are wrapping up the entire, when you're ready to wrap up the books. Now in this case, what does it mean to wrap up books? Well, like I mentioned before, right? When we close out the accounting period, what we're essentially doing is we're measuring profitability, but we're also starting the new accounting period with some kind of new measurement. So again, if profitability, again, when we talk about our temporary accounts and our permanent accounts, our temporary accounts were expenses and revenues, right? When we understand why we close them out at the end of a given period is because, again, it allows us to measure how much revenues we've earned, and then of course it also allows us to measure how many expenses we had for that current accounting period. Now again, an accounting period can be divided into many different ways, whichever way it makes it sense for you to close out your accounting period. So it could be every day, every week, every month, every quarter, or every year. Now, most common ones that you would normally see would be on a month-to-month basis. So you guys are able to see, oh, well, this is my revenues and my expenses for the month of June. Or if you do quarterly, I know that many corporations do quarterly and annually. So they do a quarter statement. So then, again, they can see how many profits they made in the quarter between, like, I don't know, January to March. And then they can compare it to their quarterly statements for the month of April through June, okay? And what does that actually tell us? Now, when you run a financial statement or basically test for profitability, what we're actually doing is we are kind of, in a sense, telling our internal and external users how is the company doing, okay? And that, again, then that means that we must close our accounting period at those given specific times, whether you want to do it every day or whether you want to do it at the end of every month, okay? Now, again, it's definitely useful that you do that, just in case, like, for any reasons that you do mess up during the year. At least when you close out the accounting period, that means you verify that everything and all your accounting is correct. Now, how do we do that? Well, here's a few things that we can do. We can search through our entire books just to make sure that our accounting is correct by going through each transaction through the transaction list and verifying, did I make any mistakes? Okay. Now, I'm going to be talking about making journal entries, which is actually predominantly used for 4 things. Okay, here it lists 5, but usually it's definitely 4. Right? 1, in case you do make mistakes and you need to recategorize your transactions from one account to another. Okay, so common mistakes, again, we're all human. Sometimes we create accounts, or we place items in another account by accident without realizing, wait, this is supposed to be in another account. Okay. Other things too. So again, part 1 and part 2 is recategorizing your transactions from one account to another. So again, it's also doing class from one class to another class. Okay. Number 3 says right here, we're going to allocate prepaid expenses for each month. So again, when you do make purchases of, let's say, insurance or rent, right? Those usually come with paid accounts. Usually, when you buy insurance, you can't buy month-to-month insurance. You usually sign up for a whole year. And then if you sign up for a whole year, then you're protected for that whole year. But depending on how often you have your accounting period, you need to divide it. You need to divide the yearly insurance based on how many months, or in this case, how, like, the expense for the current period. Okay. You also need to use the general journal for any non-cash expenses, okay? What is a non-cash expense? A good example is going to be depreciation, bad debt expense, okay? And those are just to list a couple. And so we're going to talk about depreciation in this chapter. Other things too, you can also close out owner's equity, owner's draw and owner's investment to equity. That is only if you are a sole proprietor, okay? Now, of course, when we're learning about QuickBooks, the assumption is that you are either going to work for a small company, which could be a small mom and pop shop, or vice versa. Okay, so that's making general journal entries. Now, how do I turn them on? Well, let's take a look, because we're going to do an example right now where we're going to recategorize using a general journal entry. Okay, so this is where you're going to find it. Only one spot and one spot only, assuming that you don't have the accountant's version, of course. It's always going to be under company. Okay, there is no icon on the home page for a general journal. But it will be under your company menu, right? Assuming you don't have the accountant's version. It's going to be under company, and you have the option to make a general journal entry. Okay? That's the only way you would be able to do a general journal entry. Because once again, most of the transactions you can do through other forms or through other windows. In this case, this is, once again, if you make a mistake, if you need to make adjustments, you have the option to make a general journal. Okay. Now, again, for any of the transactions, right? You can just create a general journal in just to create a transaction, right? Because ultimately that's what accounting is. It's basically processing everything using a general journal entry. But in this case, right, we instead of using a general journal entry for everything that we do in QuickBooks, right, there's other means that we can be able to process those exact like sales, right? Or any other transactions that exist, right? It's only just meant for making smaller, minor adjustments. Okay. So again, usually when you have your general journal, you'll get this window right here. You can always ignore this. It doesn't really matter. in regards to the to what that window says, because at the end of the day, you're going to make an adjustment entry. Okay. So when you actually start your general journal entry, usually best recommendation for doing general journal entries is to create a bank account for general journal entries, okay? Because when we talk about non-cash transactions, right? It's a non-cash transaction, meaning there's no real cash involved. But in terms of accounting, right, when we talk about non-cash transactions, we're basically moving money from one account to another, right? That's considered a non-cash transaction because you're not actually spending the money. So in this case, the best way to kind of understand that, if we're primarily using our general journal entries as that type of as that type of I don't know what to say, as that type of entry, right, where we're making those non-cash transactions, your best bet is to, in order to keep track of your non-cash transactions, you essentially would create a general journal entry using the general journal's entries bank account, okay? This is just to help you keep track of all of the general journal entries that you created. If not, what happens is that at the very end of your chart of accounts, if you have, not created a general journal bank account, you can be able to locate it at the very bottom of your chart of accounts, okay, for non-cash transactions, okay? But in this case, in this case, the chart of accounts already has a bank account for general journal entries. Okay, so in this case, I believe we are looking at the end of January. So we start with the date first, right? Usually, your journal entries would occur at the very end of the month. Okay, that's typical for a typical company, because usually a month-to-month kind of span gives you a pretty clear overview of how your business is doing. Now, in this case, it says right here, General Journal Entry 2018-4. In this case, we're not doing we're going to do 2021-1. Okay. Now, again, it says right here, you're making an adjustment entry. In this case, you're really not. But this doesn't really matter whether you have this on or off. Just because, again, it's just in case you don't link this to your bank account, then it will, have a little section for adjusting entries. But in this case, we're not really adjusting right now. We're actually doing a recategorizing. So it's not really an adjustment. So you can choose to either have that on or not. It doesn't really affect anything that you really do in regards to the adjustment section, except for just telling you that this is an adjustment entry. Right? So again, first thing you want to do is you want to have the bank account. So then when you do your transactions, it will always have it here in this bank account. Okay? And I'll show you what I mean when we complete this transaction. Okay? So here you have your accounts here. You have the debits and the credits, and you have the reason of why you're using this. All right. So in this case, we're using this because we're going to recategorize an expense. Okay. That's the very first thing that you want to do, is recategorize an expense. Okay. And in this case, we're going to create a general journal entry for utilities expense, and we're going to be taking it out from our rent expense. Okay? So in this case, right, when we were paying rent, we accidentally included a portion that is for utilities, right? Because rent is usually a flat rate, right, a flat number that you pay consistently, and utilities are going to be your water bill, your electricity bill, things that can fluctuate. So in this case, our general journal entry is that we are going to be moving some money from our rent expense into our utilities expense. Now in this case, this is where it highly recommends you that you do need to have an accounting background to be able to understand which accounts you're moving from one account to another, right? In this case, I'm moving from my rent expense into my utilities expense. Now, in this case, QuickBooks, they're very straightforward. They kind of understand what you're trying to do, even if you decide to list a credit first. So there's no real rules that really apply to a general journal entry. As you can see, everything's just listed out. It's not left aligned or indented by any means. As long as you're able to confirm that you have a debit and a credit in your transaction. Now in this case, right, so that means I could have just put anything in order. It doesn't have to be debits first. But the way that we do accounting, we do need to understand which accounts are going to be debited first and which accounts are going to be credited last. All right, that's just the rule of accounting. The way that you understand it, QuickBooks, you don't really need to apply that here, right? You could just do whatever you see and add it in here. So that's the great thing about QuickBooks, because once again, you don't need an accounting degree in order to operate QuickBooks, okay? It just helps, and so you're able to understand it. Now, in this case, we're taking from one account to another, okay? So there's utilities, and then I'm going to do rent expense, okay? And in this case, we need to take out, let me see, we are going to be debiting our utilities expense for the amount of $25.62, okay? Now, here's what's also even better about QuickBooks is that what if I accidentally made a typo, okay? What if I actually put $28.62, okay? I maybe fat-fingered it. It will automatically calculate that, hey, you have a discrepancy or you have, you're missing a $3 debit. Now, in this case, when you do general journal entries, your debits must match your total credits. So you can have a bunch of accounts that are in the debits, and at the end of the day, your total credits must match. Now, in this case, right, I have 2562 versus 2862. That for sure does not match, and QuickBooks will not allow you to move on forward, right? Will not let you enter this transaction unless your debits match your credit. So right now, I have $3 missing, but it will not let me go because I need to enter in an account, so then I'm able to balance out my general journal entry. So here's another preventative measure to ensure the accuracy of your accounting is that it will not let you enter in a transaction if your debits and credits do not match. Okay, so in this case, right, we're going to change this back to 2562 because that's what the book tells you to do, that it's 6562. And then it will bring this up $3 here, but you can just zero that out. Okay. And again, you can write your memo has copied from the very line above, which is recategorizing your expenses. Okay. So once your journal looks good, right? If for any reason it's linked to a particular person or a class, go ahead and put that in there. So maybe it was for the San Jose location, or maybe it was for the Walnut Creek location that you're making payments to the rent, and you accidentally put all of the rent into the rent and did not transfer some of the amount into utilities. Okay. So once everything looks good, right, this is my very first one, and I'm going to go ahead and click Save and Close. Okay. So now the question is, what happened to my general journal entry? So if you go to your chart of accounts, right, you should definitely at least consider having some account. Now, when I go down to the bottom, this is what I was talking about when it comes to non-cash transactions, right? You have a small section down below here where you have miscellaneous accounts. So again, right here, non-posting, we have a bunch of non-posting accounts. So this is what I meant when you have a general journal entry. It will automatically create an account down below here, which basically gives you a non-posting or a adjustment section if you do not associate to a bank account. But in this case, I did create a bank account right here called journal entries, because once again, this is a non-cash transaction. So if I double click on journal entries, right here you go. I just created one for 2021. Okay, so these, so these are all for 2024. Okay, but in this case, there it is. 2021 general journal entry, and if I double click on this transaction right here, it will pop up the journal that I just did right here for the utilities and the expenses. Okay, so that's the best rule of thumb, is in order to keep track of your general journals, you should create a bank account called general journal entries, and that way when you do a general journal, you can easily locate it or modify it, fix it. What if you accidentally modified it to $28.62 when it was actually only $25? You can come back to here and always edit it at any given time. Okay. Again, if you can't find it anywhere else and you forgot to link it to an actual bank account, you can simply go to the company, make general journal entries, and at the very top, you can go to the back button to be able to locate it. Okay. But that's going to be also a hassle because you would have to go through all of the transactions because you didn't link into a bank account. All right. So that's that right there. And notice this. Because it's a non-cash transaction, your values will never, ever, ever be over or under. So in this case, my general journal entries doesn't actually give me an account balance. Why? Because I'm moving exact change from one account to another account. There's no money flowing in or flowing out. I'm just moving from one account to another. Okay? And that's how you create a general journal entry. Okay? Any questions?
No.
Okay. Now, here's where you have to also pay attention because when you make a general journal entry, right, notice at the top of the window or down below, it only allows you to be able to only adjust or recategorize accounts. So if you are intentionally moving from one account to another, you can only use the general journal entries. But let's say I made a mistake in the sales process where I'm using an item. Well, if that's the case, you cannot use a general journal item to the general journal entry in order to recategorize or fix a mistake that you did in the sales process or using an item. In this case, we have what's called a $0 check. Okay, and what does a $0 check do? Once again, when we look at just writing a check in general, you have the option to either use an account or an item. And that's why they want you to use a $0 check versus being able to do a general journal entry. Because again, a general journal entry only allows accounts to be modified. All right. If you're trying to recategorize or fix a mistake using an item, which is in regards to a sales process, you must use a $0 check. Okay. Now there's no actual check called a $0 check. It's just a standard writing a check, but in the way that you use the check, it's considered a $0 check because you're not really spending money or writing a check to some person. You're just recategorizing or adjusting the amounts from one item to another. So in this case, right, let's go ahead and take a look at a $0 check. Okay, so let's go ahead and take a look at this example here where we actually we accidentally, when we journalized it or when we created our sales receipt, we actually associated to the wrong item. So in this case, let's go ahead and take a look at the example here. Okay, so what it tells you to do is when you go to the write a checks function, okay, that's all you have to do. So whatever way that you can get to the write checks function, excuse me, that's what you're going to do, right? You're going to basically write a check, okay? Any way that you can get there. So whether it's to the banking menu or the home page, okay? Okay? And so in this case, right, your automatic assumption here is that you're going to be writing a check from your checking account. No, this is where you actually are going to adjust this and say you're going to be using a journal entries. Now, again, you're going to get this little message saying, do you know that you can, you can automatically save accounts, so then the next time you do write a checks, it will automatically link it to the previous account. In this case, okay, sure, cool, whatever. And in this case, you need to also remember that you have a reference number. In this case, you need to refer this as 2021-2 because this is another adjustment, right? And in this case, we're taking a look at making the adjustments from to an account called inventory adjustment. Okay, so inventory adjustments. Okay, and it's going to be, this is going to be to a specific, to a particular customer, or no, in this case, it's not a customer, so let's spell this correctly, inventory inventory adjustments. Okay, that's the person that you're going to associate this account with. And if you hit the tab, it doesn't exist. So you need to quick add it. And it's not going to be a vendor, customer, or employee. It's going to be another name. Because in this case, right, we're not linking this to an actual person. We're just making an adjustment or changes to an item. So that's why we have to create another person, because it will not allow you to move on forth without having an associated person linking to this transaction. So I'm going to click OK. All right. So once again, down below, instead of clicking expenses, we're going to click items. Okay. So in this case, we're going to click on those two items, and we are going to change it from an expense tab called cost of goods sold, right? And we're going to change it into what's called parts for inventory. So in this case, right, we're going to go from one expense account, which was cost of goods sold, right? And let's say because I placed it under that account, I'm going to itemize it. Now, in this case, what was the total amount for my cost of goods sold? Well, let's take a look in your book. Okay, so in this case, the cost of the goods sold was $75. Okay. And of course, with that being said, the memo here is that we are going to be putting in that we are doing parts to repair a camera. Okay. And then, of course, because we're taking from one account, right? And we're going to link it to a bunch of items, okay? And what are these items that we're linking them to? Okay, we're going to be linking it to a camera SR quantity 1, okay? Camera SR, okay? Again, quantity 1, okay? And here, we're going to be linking it that this is a total of $450. Okay. Oh, sorry. On my expense account, it's supposed to be negative. Sorry, it was so tiny. I did not see that. This is supposed to be negative $75. Okay, and the item is $450. Okay. And then, of course, we're also going to be linking to another account for a camera SR refurbished. So we're moving it from one camera because we made fixtures and modifications to it to another account called camera. Sorry, another item. Right here, refurbished. Okay, and of course, it's going to be quantity 1. And
Linda, one above, I believe it is -1, says here on step 6.
oh, okay, sorry. Okay, yeah, sorry. The book is so tiny. Okay, so -1 because we're moving from one account to another, and this time because it says $450. No, it's not going to be $450. It's $525 because we added a fixture to this. Okay, because this is the cost of. So once you've done that, you're going to get an answer saying that you have changed. Okay, please, you can ignore that because you don't want to have any changes to that because again, a refurbished camera, right? It can cost lots of money to repair, right? So in this case, I have negative 450 plus the negative 75 for my repairs. And I'm basically going to add it to another item called camera that's refurbished for $525. And notice this. This is why it's called a $0 check. Is because at the end of the day, your check must always equal to 0. Okay, and of course this is going to be what was it? February 2024 or something like that. I think, or April. It was like April.
It's 20. What I can see is 4/20/2024.
For 2020. Okay, so once again, at the end of the day, your goal is that when you're transferring from one account to another, or in this case, I did a split where I took an account and I also rearranged from one account to so one item from another item, right? In this case, these are my items for inventory. I am making an adjustment by taking from one account and putting it into another, one item to another item. In this case, here you go. And at the end of the day, your goal is that it should equal to $0. And that's why it's called a $0 check. Okay? So once everything looks good, right? It's not associated to any store because, again, this is inventory. Inventory doesn't mean you have to associate it to a specific class or a specific person. Okay, so once everything looks good, right? I have $75 of expense, which for repairing the actual camera, and we have the item. We're removing it from the actual camera, and we're fixing it, and we're placing it into cameras that are refurbished, right? And I can save and close. Okay, and again, what happened to that transaction? I'd be able to find it into my general journal entries because that's exactly where I linked the account to, right? So in this case, 2021-2 is right here. I wrote a check, okay, for inventory adjustments. And if I double click on it, it will pull up that check with the associated amount of what I transfer from one account to those two items. Okay, so that's what's called a $0 check. Now there's a bunch of other examples that you can do in regards to, let's say I accidentally categorized a retouching, but I meant to put in an outdoor photo shoot. You can easily fix that by creating a $0 check. Okay, so that is using a $0 check. Now, of course, there's other means to also use a $0 check, and that is for what's called bartering. Okay. Now, in this case, what is bartering? Well, in QuickBooks, especially when you have a service type company, what you can do is you can pretty much trade services for other services. So instead of paying somebody for a service, like for example, right, I have a third party vendor, and instead of haggling for prices, I offer them a service in place of making payments to them. Okay, that is 100% perfectly legal. Okay, of course it's not in a means of a way to do business, because then you're not getting money, but at the same time you're not losing money either, because you're basically trading a service for a service. Okay, now it's perfectly legal, right? It's perfectly legal to be able to do this, right? If, for example, let's say a vendor or a customer comes in and they said, well, how will I trade you this for this? Okay, in most cases, vendors do that, or other service companies do that, or maybe you have competitors, companies that are trying to trade, goods with you. This is perfectly legal as long as you make an agreement that yes, my price value for this it is equal to the service that you can provide for me. Okay, so that's the fine line here, is that you have to come to an agreement that is this the same price level, or is it valued for the equal trade for that service. Okay, so in this case, we're going to be using the $0 check once again, because again, you're like an eye for an eye, right? If I do something and I trade you for a service, it must be equal in regards to what that service is. So in this case, right, we're going to take a look at offering retouching packages in regards to trading it out for an actual photo session itself. So in this case, I'm going to go ahead and create a $0 check once again. Okay, in this case, once again, the bank account's going to be general journal entries or journal entries. So here it is. Journal entries is already automatically there. Again, it already associated. This is the third transaction that you're creating. Okay. So this time, we are going to be linking this. Okay. So this is for 25. So it's going to be actually January 31st of 2025. Okay. So let me change this to a 5 so I can just hop on over to 2020 January 31st of 2025. I don't know, but I'm just going to follow whatever the book says. And then it says right here in the memo, you're going to put barter retouching for headshots. Okay. Now, in this case, who is the vendor that I'm going to be working with? It could be any third-party vendor. So in this case, maybe it was my photographers. Okay. which is going to be Wong and Son. Okay, they're independent contractors that help the company get photographers. So in this case, I'm gonna write here, barter retouching for headshots, right? So in this case, I'm going to be linking one item to another. So you're going to click items, okay? And you want to link to retouching. Okay, so to retouching. Okay, so here's one retouching services. Okay, and so retouching and for the Anderson wedding. Okay, for Sarah and Michael. So quantity. Oops, I skipped a line. Let's go back up again. Okay, so we want to do this as retouching. Okay, quantity 2. Right? And who is it for? It is for Anderson wedding, Sarah and Michael. Oop, wrong one. Ah. We want Sarah and Michael, not Sati. Okay, so Anderson wedding, Sarah and Michael. Okay. Okay, and then in this case, right, we're going to tell, hey, Wong, if you could do this for me for the Anderson wedding, I'll go ahead and take some photo sessions for you, right? I'll go ahead and do some headshots for you. So one indoor photo session. Okay. Okay. Indoor photo session. We want one of them. Okay. And in this case, we want one of them for the negative $100. Okay. No, make sure you never change the item's cost. Okay, so it's going to be for a negative $100. Description is going to be headshots. Okay, for staff members. And it's going to be for the San Jose location. Oh, I forgot to link the other two. Okay, so in this case, headshots for staff. Okay. Again, is it billable? I'm going to make sure. Oh, it's fine. All right. Okay, headshots for staff is not sorry. Cancel. I need that to put that in the memo. Not there. So again, San Jose location. Okay. Sorry, I'm supposed to put it here. Head shots for staff. Okay. Once again, your end goal is you're trading a service for a service. Even though the prices may not match, at least, it's very close. And you have to make an agreement because at the end of the day, you can't take back something that you change your mind for. All right. And at the end of the day, my $0 check ended up being exactly 0. So this is where I'm treating retouching services for an indoor photo session. Okay. And once everything looks good, I can go ahead and click Save and Close. And once again, you're able to find that transaction in your General Journals bank account chart of accounts. Okay. Any questions in regards to bartering?
If you don't put a description um, on that transaction that you just did, does it matter?
In this case, you definitely want to put a description in, just because, like, especially when you're bartering, you definitely want to make sure that you know exactly what you're doing. Now, you could put a description, but at the very bottom, you could have easily just put that as a memo.
Okay.
So, is it necessary? No, as long as you put something somewhere, whether it's in a memo or whether it's on the description itself. Because if you do end up billing Wong and Son and saying, well, this is with my agreement that we traded this service for this service, then yes, you definitely want to change the description on that.
Okay. Thank you.
Mm-hmm. Okay. All right. Any other questions?
No.
So here we are, this part right here where we're editing, voiding, and deleting transactions, okay? So definitely rule of thumb is, because this is technology, it's a software, we're humans, we make mistakes all the time. You can edit information at any given time, as long as you have permission to do so, okay? Now, if you are a full admin, the person who created the QuickBooks file in the first place, you can edit, modify anything in this, anything that you've done, okay? Any mistake that you've made a typo for, you could always go back and fix it. Now, of course, if you're creating users and you don't have admin privileges, unfortunately, you can be restricted on editing, deleting, and voiding transactions. So make sure you are aware of that. But again, technology, it's so easy to make typos because at the end of the day, who's entering in the information into the windows? You are, right? So anybody can fat finger a lot of things. Typos are very common. If you're doing this way too quick, you can easily accidentally make typos. So that's why QuickBooks kind of makes preventative measures by saying, hey, do you mean this? Or there is no such thing as this person, right? So it stops you and it kind of gives you error messages so you know that you're avoiding to try to make those mistakes and having to come back and edit it. Now, of course, you definitely don't want to edit anything that was in a closed period, just because that will trigger a lot of other transactions. But again, you can fix any transaction as long as you like, right? If you made a mistake here, you made a mistake there, then it's always good to know that you can always edit the information. So let's take a look in your book. I believe we made a mistake here where we forgot something to add on there. So here from the customer's menu, we're going to go ahead and select create an invoice, and we're going to click the previous one. Okay. So let's go back to this. We're going to select invoices, and we're going to go to the previous one. So here's my invoices, and I go to previous. So again, if you accidentally, or maybe it's the end of the day and you just accidentally press enter and you forgot to add something or link it to something, you can always modify it anytime, right? So in this example here, when we're editing this invoice right here, we are making sure it says 2025-106, okay? And in this case, right, we forgot to, we forgot to add outdoor photo sessions to this invoice, okay? So here we can add it at any given time, of course. So here you go, outdoor photo session, okay? How many? We're gonna put 3 of them in there, okay? And then we can go ahead and click save and close, right? That's it. And then we can modify this right here. Thank you for your business, your memo. There is no memo there, but you can put whatever you'd like, okay? And again, it's going to be for Maria Cruz. Everything looks good. And of course, you can save and close. Okay. And again, you're going to get this error message saying, you made changes to this. Would you like to save it? Yes. Okay. Once you get that beep of approval, so again, if you forgot to add items in there, yes. Now here is food for thought. If you sent this customer an invoice and you did not have that particular item there, your customer can come back at you and say, hey, this bill doesn't look, or this invoice doesn't look right. I thought I wanted 3 retouching and 3 hours of outdoor photo session. Is this correct? Therefore, if you do end up making a modification to it, your best bet is that you should reissue another invoice to the customer so they verify that this is the correct package that they wanted. So again, there's a lot of factors when it comes into making mistakes, especially if you send them out and you need to fix them. Okay? So easy as that. Easy as that. And if you wanted to also as well, I can go to any customer at any given time, right? So for example, maybe Maria Cruz, right, comes back at you and says, wait, I didn't ask for 3. We only did 2 hours of photo sessions, right? Then yes, you could go back to Maria Cruz branch opening, or I guess it's Maria Cruz. Maria Cruz branch opening. I'm going to click on all transactions, okay? We're going to go back into that one for 2025 106, right? And we can modify saying, okay, oh, this is the wrong one. 2025 106. So this one right here. And let's say she did say that she only wanted 2. You can always modify it at any given time. Just make sure that you verify that, yes, you accept that these changes have happened. And you click OK, right? So again, you can modify any form at any given time. It's so easy. All right? As long as you have the admin privileges or the admin rights to be able to do so. So again, yes. So in this case, you can edit and modify any transaction you'd like at any given time. All right? All right. So let's take a look here. Now, what about voiding transactions? Now, you want to be very careful when you use void transactions, because voiding transactions, what it essentially does is it cancels the transaction, but it doesn't get rid of the transaction, as in, like, it doesn't disappear from your transaction list, right? So, for example, I voided a check, right? It leaves that the transaction did priorly exist. It's just everything becomes zeroed out and the transaction becomes reversed. Okay. So again, we've seen voiding transactions pretty common, right? We saw it in yesterday in chapter 11 where you're trying to avoid a paycheck. Other transaction that involved voiding was in chapter 4 when we wrote out our first check and we wanted to avoid it. So there are many reasons that you want to avoid a transaction. You can avoid almost any transaction that exists in QuickBooks, especially when it comes to sales process or even voiding a general journal transaction, right? It's in a sense, it's basically undoing, but it's not removing the transaction off your list. Okay, so understand that's the huge difference, is that it's not going to get rid of that transaction. It's just undoing it and basically reverting it back to 0. Okay, so again, if you do, for example, void a check, you're gonna again, if you try to make a bill payment to a particular bill and you void that transaction, it just basically undoes it, and then it recreates the bill and it just puts the money back into your checking account. All right, but it does not get rid of it on your transaction list. So in this case, right, here are a couple steps that you can do if you have those kind of situations where you do need to void a transaction. Okay. And again, you'll get that error message. We saw many occasions of voiding transactions. It just basically, once again, reverts the transaction and undoes it. Okay. But here's also another important factor. Here is actually deleting your transactions. Again, rule of thumb, and even QuickBooks tells you, best recommendation is to not not delete any transactions, because it can cause errors and holes into your transactions, because when you're deleting a transaction, you're actually you're wiping it out from existence. Okay? So that's a huge difference between voiding and deleting. Voiding, you still see the transaction, it's just it's just reverted. It's canceled. It's undone. Where deleting gets rid of the transaction, and you can definitely hurt yourself, because it can cause discrepancies, uneven balances, and so on and so forth. Again, because you're actually just permanently wiping it out from QuickBooks as if it never existed. Okay, and there are some difficult things, especially when you run your reports and you have those holes in your transactions, is because you delete things. And best rule of thumb is you should never delete anything unless, right, we have circumstances such as you've never ever used that account, you're able to delete it. Okay? Or if you never use this line item, you can delete it. If this person never ceased to exist, you can delete it. Okay? Now, of course, you have to have all admin privileges to be able to delete people as well. So again, yes. However, here's a little tip that you could do when you are preparing for the new accounting period, is that, because if you think about it, when you close out your books, you're basically going to be locking up your transactions. So when you lock your transactions and you need to move on forth with the next accounting period, how should you move on if all of the information from the previous month is still there? Well, lucky for you, QuickBooks also allows you to be able to delete all transactions, but leave the lists alone, meaning all my transactions could be gone because I'm starting a new accounting period, right? I don't need specific accounts details on my accounting, especially, let's say you've had QuickBooks for a year, right? And then you look at your books and you have all these transactions that happened the previous year. What you can do is you can delete all of those while keeping the people, the names, the items, your chart of accounts, of course. You could keep all of those intact, right? While just only simply deleting all your transactions. And that's going to be called the condensed data feature, okay? Now, again, where do I locate that? It's pretty straightforward. If you go to your file, okay, you go to utilities, okay, and then you have the very second to last option to condense your data, right? So in this case, right, because you're using QuickBooks for so long and you have old transactions that you don't want to delete because, they're just so old, right? You can just remove every single one of them by clicking on condensed data. Now, of course, I'm not going to do that just yet because once again, I didn't close out my accounting period just yet. So in this case, I'm just going to show you this right here, that once you click on condensed data, what you're going to do is you're going to save it in a folder for in case that you need to pull up this information once again. But you would most likely pull that information up by opening up a backup file. Okay, so in this case, I'm going to go ahead and click cancel because I don't want to delete all my transactions just yet. I still have a lot more things I have to do. Okay, but again, if you can follow in your book, it will give you a step-to-step on what happens when you do end up saving all of those items into a folder. Okay, so yes. So again, it's perfect, especially when you're starting a brand new accounting period. You don't want to see your books being cluttered by so many items and et cetera, especially transactions that were a long time ago, right? You're able to start off with a clean book without having to start all over from square one, entering all those customers, entering all those lists, all those items, right? So in this case, right, it will save you a lot of time. And this is how QuickBooks allows companies to continuously use the same file over and over and over and over again without having any issues, because they don't need to personally go in and delete all the transactions that happened in 2020 something, right? You can simply use that feature and it will get rid of all the transactions, right? So any questions there?
No.
Okay. So here we're going to talk about memorizing transactions. So this is actually a new, not a new feature, sorry. This is one of the features, yes? Was that a hand or question? Yes. Well, I mean, voiding is the same thing as canceling, right? Where you undo a transaction. So voiding, right? If you remember from yesterday, right? When you void a paycheck, right? It's still going to show up as you had create that paycheck, right? But the only difference here is that when you void a transaction, it's still in your book saying that you voided this transaction. Where deleting, right? If you just delete the whole transaction, it doesn't exist at all. So if you think of retail, right? When you make a mistake, you click void, right? And what it does is it appears on the list saying that you did make a mistake and you voided that transaction. It shows on the receipt. But if you're going to delete the transaction, it will not appear on the receipt at all. It will look like that transaction never happened at all. Yes, is that clear? Okay. All right. Any other questions? All right. So let's talk about memorized transactions. Okay. When we talk about QuickBooks, right? Think about it. The word is QuickBooks, right? It makes you process accounting transactions a lot more quickly, right? We already saw that, by adding in vendors, adding in items, it makes it that much more easier to fill in because we just do the autofill feature where we type in a few letters and select it, right? And it will automatically fill in the form for us. That is one way of making the transaction go a lot by quicker and entering it in a lot quicker. Well, here's another way that you can even make it even more quicker by using memorized transactions, okay? Now, what is a memorized transaction? It's basically when you have something that's reoccurring. So a bill that you're being constantly billed the same amount every single time, right? So a great example is a rent bill, right? You already know every single month this is what you're gonna owe, and you need to make a payment every single month. You can memorize that transaction so that every time you receive the bill, instead of having to fill out everything from everything right in that form, it would automatically create it for you, and all you have to do is just press save and close. Okay, and that's what I mean by it's that simple. So let's go ahead and take a look at how to memorize a transaction. Okay, so you do need to create the bill in the first place, and then at the very top of the window you have this little button that says memorize. So let's go ahead and take a look at creating that bill in the first place, and then we can go ahead and memorize it. Now there's a few things you can't memorize, okay? That is any bill payments, any checks, paychecks, and any receiving payments from customers, okay? because those are going to fluctuate. You can't expect that a customer is going to pay you the same amount every single time. You can't expect to pay your employees the same every single time, right? Because especially if you look at employees, you know, a person could call in sick at any given time, right? A person can call in and get PTO, vacation hours, any single time, right? So that's the case where you cannot memorize something like that because, again, in reality, especially with customer payments, right? You can't expect a customer to pay you the same amount every single time, right? Especially if you finance with them. Let's say they owe you $2,000 and you say, well, the minimum payment is $25. You can't expect a customer to want to pay $25 every single time, right? Maybe they have more money this month, so they pay over the minimum. Maybe this month they pay less than the minimum and make multiple payments. Or maybe they pay exactly the minimum payment. You can't predict what a customer will pay you. And same thing goes around with you making a payment to a vendor, right? Especially for a credit card, right? Just as the exact same example, you could pay $25 here. Next month you could pay $50. Next month you could pay $100. All right? You can't predict making payments or receiving payments. So that's the only thing that you cannot memorize. However, other things that you can memorize is if you have an occurring customer that orders the same thing over and over again, right? We call those regular customers. Then yes, you can invoice them the same exact one, or maybe this customer only wants one thing and one thing only. They only want coffee. Okay, awesome. I'll charge the coffee. Second thing too is they could also they could also again, vendors, right? We can be billed the same exact way as well, right? Again, the bill that we're going to be entering in is going to be an example here. Okay. So I'm going to go ahead and close all my windows and get to my enter bills window. And I'm just going to use it from the home page. It's usually easier. But remember, you need to be able to know all the ways to enter in a bill. Okay. And I believe, let's see what your book says for entering this bill. We need to enter in a bill for Sinclair Insurance. Okay. Oh, misspelled there. So Sinclair Insurance, right? Boom, everything fills in for you. And let's see what this says here. And I believe the date we have here is going to be January 15, 2025. Okay, so January 15, 2025. Okay. And again, the bill reference number obviously is going to be always different because, you know, when you receive your bill, you're going to use that code on there. So by clicking that in there, what I'm going to do is this is associated to an expense account. In this case, I'm going to link this to insurance expense, right, that I have to pay every single month, $600. Okay, so right here, insurance expense for $600. Okay. And let's see, this one is going to be for monthly insurance expense. Monthly insurance expense. Okay. Okay. So monthly monthly insurance. Okay. Once everything looks good, whether you want to keep your memo the same, you just put it up here too. Net 30, it should be fine. So once everything looks good, right? You don't want to save enclosures yet. You want to go up to the window, and then you have the option to memorize, okay? So if I click memorize, right, you're going to get this window here where it says, well, what do you want to call this? This one's going to be monthly insurance. monthly insurance. And then it's going to be, do you want to add this to my reminders list? Do you not want to remind me, or automate the transaction entry? So in this case, you want to click automate, because every time you open up this, it will create the bill for you. Okay. Now again, how often do you need to pay? In this case, you need to pay every single month, twice a month, every few monthly. Okay. And then your option here is, when's the next due date, or when's the next date that you're going to receive the bill. In this case, it's going to be, I believe it's February 15. Okay, February 15 will be the next billing date that you'll have. A number of remaining. So in this case, you have 11 remaining because the first one's already here. And then how many days in advance do you want to enter? In this case, I'm going to say at least 5 days. Give me at least 5 days notice. Okay. And then you're going to click OK. So once again, if you have this, you're going to hear that snapshot, and then you could go ahead and click save and close. Okay. Now, how do I locate my my memorized transactions? Okay. Now in this case, there you can do either or, but you definitely want to go to our actual memorized transaction list. Okay. But what if I decided to just enter in a transaction for Sinclair insurance? Once again, if I just do a random bill, right, and I fill in Sinclair insurance, right? I'm going to show you why this won't work. I type in Sinclair, okay, insurance, right? And when I do that, it pops everything up. However, my date doesn't show up. My amount doesn't show up. And it says that it tells me that, what is this memo for, right? In this case, this is why you cannot use it, because it will not pull up the information for you. So the best recommendation to do this, if you memorize your memorize a transaction, right? It only memorized the item for me. Okay? So I can't do it that way. I must do it a specific other way. And let's go ahead and explore that. So I'm going to go ahead and close this transaction right here. And let's see how you're going to actually do it. So again, you have, no. Okay. So how do I do that? You're going to go to your list at the top of your menu, and you're going to go into memorized transactions. When I do that, I have this right here. So then when you actually double click on it, it will create the bill for the very next month right here, February 15, right, for $600, right, monthly insurance, and then I can go ahead and click save and close. All right. If I want to do it again, maybe it's March. I come to memorize transactions. I double click on it. Boom. Now it's for March. Okay. For the $600. Okay. Do you want to say that? Okay, I'll just click yes. Okay. Now, for any reason, let's say you need to modify it. Let's say you need to modify that bill for any reason. Maybe it changed, your monthly bill changed. Maybe it increased to, $650 or something like that, right? You can go ahead and right click and edit this, in this case, or edit memorize transactions. And basically you can toggle it. Do you want to automate it? How many more do you have left, right? Okay. That's how you fix it there. But let's say I want to fix the actual bill itself. I would unfortunately have to actually double click it, view the bill, and let's say I called them in and said, hey, can I change my date to be every first of the month? Okay? You call them and do that, and then what you're going to do here is you're going to re-memorize the transaction. So again, it says right here, monthly insurance is already in your memorized transaction. So what do you want to do? I want to replace it. Okay? And what happens here is when I go ahead and save and close, that means the next time I put this in here, it's going to be for, oh, well, okay, in this case, it did not change that. It's supposed to change that. Anyway, it's supposed to be for the first. All right. So in this case, all the monthly, but it still shows you that you have the 600, but this is supposed to change to the first of the month. Okay. All right. So in this case, if you want to actually modify the bill itself, you actually have to go in there and re-memorize it. Okay. Let me see if I, because I'm going to replace it. But maybe let's try doing the number here. Instead of 600, it's 650. Okay. Memorize, replace. Okay. And then I'm going to go ahead and save and close. And let's see what happens next. Okay. So in this case, it memorized that it's supposed to be on, it's supposed to be $650 opposed to 600. Okay. All right. Any questions in regards to memorizing transactions? No? Okay. Kim, or let me see who's making that noise. All right. So, all right. Now that was memorized transaction. All right. The next section we have is actually using the fixed assets list. Okay. So if you guys remember, by going to list, right, you have a section where you can actually put in fixed assets. Okay. And again, it's pretty easy, right? Let's see. Let's go on forward. Okay, we talked about that. Okay. So using fixed assets in QuickBooks, okay? So as we know, right, when we're using fixed assets in general, what we're gonna know is that there's always gonna be depreciation. So when we buy fixed assets and we use it over a span of time, eventually that fixed asset will lose value over time, right? Think of buying a computer. The moment you turn it on, or actually no, let's redo another example. A car, right? When you buy a car off the at the dealership, right? The moment you drive off the parking lot from the dealership, it depreciates automatically. Okay? Because you drove it, right? You turned the engine on, it's you moved it, you put miles on it, right? So that's the same idea here, is that we have to consider that all fixed assets have some kind of lifespan to them. Okay, so a printer, for example, right? Its lifespan is probably maybe 3 years, depending how often you use it, right? So in this case, when we think about that, we automatically know that you buy a printer for $125 and you use it, you can expect that when you try to sell it back to the public, no one's going to buy it for $125 because you used it. All right, so that's the same idea here, where that's how the best way to understand how depreciation works is that you are going to be considering, well, if you're going to be using the asset, how do you devalue it from there? And that's what depreciation is. Now, of course, because you're not spending money to depreciate it, right? Because you already purchased it. So what you're essentially doing is you're basically creating a non-cash transaction. So that's why depreciation is one of those. Because what you're doing here is you're essentially moving money from one account to another to represent that you're using the assets, okay? And lowering its value over time, okay? But first, we have to set up our fixed assets. So in this case, we need to make sure that we have the appropriate accounts set up prior. So for example, right, you need to set up your fixed assets prior before using the fixed asset list, okay? So in this case, how do we set it up? Well, in this case, you already have to have it in your account first, right, by creating a new account for that asset. And then if you are trying to use the fixed asset list, then this is how you do it. All right, so using fixed assets item list, okay, we're going to go to company. We're going to we're going to create a company vehicle. So how do we do that? We're going to go to list, right? And we're going to go ahead and click on fixed assets. Fixed asset item list. So here you go. It looks just like this, just like every account, every item, every thing that we've been doing so far. And we're going to go ahead and click new. So you're going to get this window right here where you fill out the information of what the item is in this account. Okay, the asset name here is called a company vehicle. Okay, a company vehicle. Okay. And of course, what kind of asset account is it? It's going to be under fixed asset, of course. Or in this case, if you have a vehicles account, you would pretty much link it to there. So in this case, we're going to use this and write company vehicle. And let's see, it is going to be a used item. Okay, so make sure that you enter in that it's used. Okay, and what kind of item is this? What kind of item is this? In this case, it is a 2020 Ford Escape. Okay, and so so vendor payee. So in this case, date and cost. So purchase description is going to be a 2020 Ford Escape. Okay, it's used. Okay. And let's see, what was the date that we purchased it on? We purchased this on, okay, December 15th of 2024. So the date is going to be, so December 15, 24. Oh, wait, 2024. I don't remember how the date works. I think it's 2024. And then again, you're going to make sure you use the calendar to select the date. Okay. Now, of course, the account here that we're going to be associating this account with is going to be vehicles. So again, type in vehicles. There you go, vehicles. Okay, fixed asset vehicle. Okay. And let's see. All right, and then let's see. The cost asset is going to be how much did the vehicle cost you? It cost you $20,000. Okay. Who did you get this? Or in this case, what was the vendor or the payee that you're making payments to? It's going to be National Bank. Okay, for the San Jose location. Okay. Asset information. Okay, so asset description. Once again, this is a 2020 Ford Escape. Okay. Do they have a location? San Jose. right? Any extra notes, PO number, purchase number, again, we're sales date, okay? So once that looks good, San Jose, serial number, okay, I guess PO number would fall under that, or the serial number is going to be 1F 1FT 1FT 1100111230. So that's a serial number there. Okay. No warranties here, so we don't need to do anything there. And then once that looks good and matches your book, so make sure it does match your book 100%, because in this case you do need to make sure that matches before you can move on for it. So I'm going to go ahead and take a look at the fixed asset here. Okay, so once everything looks good, okay, that's the wrong one. Okay. Okay, no sales information because again, we don't need the sales information. So everything looks good. Vendor, once again, PO number, there is none. San Jose. So everything looks good. Okay, so we can go ahead and save and close, and then this is how we're actually going to calculate what it is for depreciation. Okay. So now you have a fixed asset, and there it is right up there. Okay, so now we're going to talk about how you actually calculate depreciation when you have this type of account. Now again, this is only for accountants, so that's why there is a couple options. If you don't have accountant, that's okay. If you don't have the accountant's version, there's other ways around it that you can modify for this, but you need to make sure you set up the accounts accordingly in order to be able to do that. Now, they teach you that you're going to go to accountant, right? And you're going to click on manage fixed assets, okay? Now, of course, if you do not have this, okay, if you do not have this feature, there is a way that you can go around it. So that's why I won't teach you this one, because we can't assume that everybody's going to get the accountant version, because you can't get the accountant's version unless, one, you are teaching, you are, a student looking at this, or you are an actual tax accountant. So that's the issue between this, and that's why I'm going to teach you a different way to how to be able to enter in depreciation. Now, how do we do that? Well, in this case, you're going to be writing a general journal entry. So we're going to go to company, make general journal entry. Okay? And we're going to, again, the date. So since we bought it according to the book, right, we bought it December 15 of 2024. So in this case, you definitely want to make sure that this is the right depreciation month. So in this case, we're going to assume it's going to be January 31st, right? Because you bought it on the 15th, right? Or in this case, we bought on the 15th, so therefore that means the rule says that we're actually supposed to depreciate it by the end of the month, right? Assuming that means December 31st, right? Again, you want to make sure you modify this accordingly. So this is the fourth one that we're writing. And again, first thing you have to do is you need to link it to an account so you're able to locate this journal entry at any given time. So general journal entries, okay? Memo here is depreciation on vehicle for December. Okay? Straightforward. Now, in this case, right, we're going to take a look at how it's going to be calculated. Again, you do need to find some kind of systematic way to be able to do this. So, best way to be able to do this is using straight line. All right. So in this case, right, we don't have a specific amount, but in this case, the book already gives it to you, right? The best way to use it is using straight line method. All right. And your assumption is you have 0 salvage value. Okay. So in this case, because the book has already calculated it for you, right, by using the manage fixed assets, right, it will calculate the depreciation for you. But because we can't assume that everybody is able to obtain the accountant's version, you do need to understand, well, this one, you're going to have to figure out what kind of method that you would use to depreciate your assets. Okay? And in the accounting, right, we learned that there's 3, right, units of production, double declining, and straight line. Best rule of thumb here is if you don't know and you don't know what you're doing, use straight line. Okay, so in this case, we're going to have a depreciation expense account. There you go, depreciation expense. And of course, now in order to link this account, you're going to have an accumulated depreciation account. So in this case, accumulated depreciation account. So these are already pre-set up in the book for you, but that's what you have to do. Okay? And in this case, right, we're going to be depreciating the asset by $125. Okay? In this case, remember, when we are depreciating our assets, we cannot depreciate it directly off the asset. You cannot devalue the value of an asset because due to the accounting gap principles, which says you must record it at historical cost until the day that you sell it, get rid of it, is when you actually recognize whether you got a gain or a loss and recognize what were the contributing factors to have the value be that low. So in this case, right, I'm going to depreciate it by $125. And that's where we go ahead and save and close. Memo is going to be monthly depreciation for 2020 Ford Escape. Okay, so I have to be specific in this case. So I put just vehicle. Okay, depreciation expense on 2020 Ford Escape. Oops. Okay. Again, you can use the copy feature on your keyboard. Okay. And once everything looks good, right, it's not associated to any other store. So in this case, once this looks good, we can go ahead and click Save and Close. So then you're going to get this error message saying QuickBooks now uses fixed assets, items, and fixed assets. Yes, okay, okay. Right, it's just making an association that you just were doing something for a fixed asset. Now in this case, right, let's take a look at our fixed asset list. Fixed assets. Okay. Oh, no, this one. All right. Now let's take a look at it, right? It's still valued, right, as what we've entered in before, which is 20,000. Okay, because once again, the idea that you can't write it off directly from the asset itself, it's still going to remain as $20,000 in your books. However, you need to keep a really good track record of how much times you depreciated it, because if you do plan on getting rid of your assets, right, disposing fixed assets, there are some rules and regulations on what you can and cannot do. Okay, so there you go. Any questions on how to depreciate fixed assets and how to use the fixed assets in general?
No.
Okay. All right. So let's see. Let's look at the time. It is now exactly 10:05. So we'll go ahead and take your 15-minute break, and please be back no later than 10:20.